me if you can. It's just this. It's not the way I'm wired, so could you please help me understand why you've given into all days reckless dark desires your.
A press release recently crossed the wire. Sprott Asset Management said it expected to take final delivery of physical silver that it ordered back in November. Eric Sprott went on to say he was concerned about the liquidity in the physical market for silver, actually taking delivery of the stuff that is purchased on international exchanges. David Franklin joins us now, a market strategist at Sprott Asset Management, with a closer look at this very interesting story. David, thanks for joining us this afternoon.
Yeah, thank you. Thanks for having me.
I mean, I don't know the mechanics of the market terribly well, but it does seem to me that taking delivery of silver purchased in November just a few days ago seems like an awfully long lag.
Well, one would think that you would buy silver on a recognized exchange and or through recognized dealers and have it delivered promptly, but that wasn't, and that hasn't been the case for us. So we raised approximately $600 million in November for investors for our silver trust. And we placed our orders beginning in November. We were assured we would get quick delivery, and here we are 2.5 months later, finally taking delivery of the bars.
That's amazing. I know that a typical bond market transaction, if the bond isn't delivered on the day, it's called a failed trade, and each day there's a penalty paid in interest and other fees and that sort of thing. Do you collect the same sort of penalty each day that physical silver isn't delivered either?
No, we... The market is slightly different in that there's it has to come from different locations, and sometimes that the bulk of silver sometimes takes longer. So there's a little bit of play in there as far as delivery goes. But needless to say, it's shocking to us how thin the silver market is, and we're seeing it in all areas of the silver market. So Scotia Macata last week sold out of 100-ounce bars, sold out of 1-ounce bars. It was on their website. We've heard stories in Europe of dealers being short on silver. And so our thesis has been that the silver market is very tight, and this is pure evidence of what we've been hypothesizing.
And you've had a very interesting way of sort of letting your investors and other people know what sort of physical silver you have.
Yes.
You've had taken delivery of. You've started a database.
That's right. That's right. Well, we most investors
on the website, so it's public.
That's right. That's right. And most investors of precious metals want to know that you own the product, and so they'll look for serial bar numbers to make sure that you actually own the physical silver. But what's interesting with our silver trust is we're trading at a 15% premium to the net asset value. So people are paying a hefty premium for the insurance that we own the bars. So this is just more indications that the silver market's much tighter than I think anybody cares to admit.
And so what do you expect for silver over the next little while with this variable? I mean, there's lots of reasons why silver may go up, but with this particular variable, what do you expect it to do to the price?
Well, we expect this to be reflected in the price. And today it obviously is not reflected in the price. For example, the COMEX market trades 300 million ounces of silver on a daily basis. Mines only produce on average 2 to 3 million ounces per day. So the paper market is wildly larger than the physical market. And so you have this disparity where the paper market for silver is not reflecting the actual physical market.
See, that's astonishing, because you could also argue that the physical market doesn't necessarily represent the industrial use on a given year either. If that many ounces of silver are traded each day, 300 million, the industry really only requires about 900 to maybe 950 million ounces in any given year. That would seem to be oversupply, really, wouldn't it?
Well, it would. It would give that impression. But when you go out and try and put your dollar down, as we did, or you put your dollar down at a coin dealer, or as we did with some of our suppliers, the silver's not there.
Wow.
So we're very bullish on silver going forward. It's a very small market. It's very thin. And we're expecting that to be reflected in prices.
There's a delicate balance, though, isn't it, particularly for viewers who are going to play this through the ETF market, because they would need to be confident that the cash that they're putting up against an assumption of physical delivery is going to be met. Otherwise, yes, they could appreciate or they could participate in the price rise, but if the physical backing wasn't there, they just have to sort of hit and hope, really, don't they?
That's right. That's right. And that explains why people have a lot of confidence in Sprott that we own the material we say we do, and that was one reason why we informed our investors. But people are paying 15% premium to know that we have the silver, and in our physical trust, they have an option of taking delivery of it. So if someone wanted to take delivery of it, we have it, they can have it, and the market's paying 15% premium for that right. So more indications. This is a very tight market.
Does it bring a demand for the local managers in a bit more, in the sense that if you're buying silver through whatever mechanism somewhere in the world, you perhaps don't know that the silver is at that place somewhere in the world. However, if you're in Canada, there's perhaps more trust that it is in your safe.
Well, it was, we received bars from many different locations around the world. These didn't come from Canadian mines per se. They came from all over the world. So, one could interpret that as we're scouring the world for enough silver to provide us for our trust. So it's potentially an explosive market and very thin.
I know in Abu Dhabi they've had these hilarious stories of having essentially ATMs that give you a coin of gold, and other types of mechanisms that I think you had talked about are also happening. Do you see that just happening more and more and more, people demanding that they know that they're getting
absolutely.
Their medals?
Absolutely. I mean, the worst thing would happen is the investor buy gold and then not actually have it when they needed it. In China, what I've been speaking about was China. They have gold accumulation accounts that they've started in China. So where you would buy as little as a gram a day in this specific account, and the demand for that product has exploded.
A gram a day.
A gram.
You have
a
an
day.
account set up.
That's right. That's
so
right.
So that goes in.
And you buy a minimum of a gram a day. Now the numbers are astounding. In China, they did it on a test market basis with one bank and got 1 million accounts opened in a very short period of time, 3 to 6 months. And so they're going to expand this to other banks in China, and they're going to expand this to India. So now we've got a whole new potential source of demand that wasn't in existence before. So with these countries fighting huge inflation, the general mistrust of governments and bankrupt governments, these are becoming wildly more popular.